Hello students, in present video I am going to explain about fifth problem from accounting for not-for-profit organizations. I am taking this question from Telangana State Telugu Academy Inter-Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about this topic. First 4 lectures videos links are available in the description box. This question is also available in the description box. Let us see the question first. Following is the receipts and payments account of Manasvi Library for the year ended 31st March 2020. Receipts and payments account of Manasvi Library for the year ended 31st March 20. Debit side receipts, credit side payments. Receipt side, 2 balance 4,550 rupees, 2 entrance fee 3,500, 2 subscriptions 18,500, 2 rent of lecture hall 2,500, 2 interest on investments 950 rupees. Payment side, by salaries 6,800, by rent 5,250, by investment 3,550, by postage 1,250, by electric charges 730, by books 6,000. In brackets he is giving some date, 1st October 2019. By newspapers 3,700, by balance carried down 2,720. 2 sides total 30,000 rupees. Additional information. First point, subscription amount includes 500 rupees for the previous year and outstanding subscription for the current year are 1,500 rupees. Second point, subscriptions received in advance 500 rupees. Third, capitalize half of the entrance fee. Fourth, books are to be depreciated at 5% per annum. You are required to prepare income and expenditure account. Let us solve this question. Income and expenditure account of Manasvi Library for the year ended 31st March 2020. In question, he has given receipts and payments account now. For that receipts and payments account also date is same, 31st March 20. Meaning is, firm is preparing accounts for the period of 1st April 2019 to 31st March 2020. So this the financial year is the accounting period of this firm. So for this period, at the end of the date, that is on 31st March 2020, this firm is going to prepare final accounts. So final accounts of not-for-profit organizations contains 3 things: receipts and payments account, income and expenditure account, and balance sheet. In question, he has given receipts and payments account and some additional information. So with the help of these two, he is asking us to prepare income and expenditure account at the end of current year. So income and expenditure account is a nominal account. So while preparing this account, nominal account rule we should follow. Nominal account rule is debit all expenses and losses, credit all incomes and gains. Gain means profit. Therefore, expenses we have to show on debit side of this account, incomes and gains we have to show on credit side of this account. Even losses also we have to show on debit side of this account. Let us see the receipts and payments account. In receipts and payments account, debit side he is giving receipts, credit side he is giving payments. Receipts are of 2 types: capital receipts, revenue receipts. Capital receipts means rare receipt, means non-recurring receipt. Revenue receipt means regular receipt, means recurring receipt. While preparing income and expenditure account, from this receipts and payments account, only revenue receipts we should take on credit side. So in receipts and payments account, on debit side, he gives a capital receipts, revenue receipts, both. But while preparing income and expenditure account, only revenue receipts we have to show on credit side. So capital receipts which are given on debit side of this account, we should not consider while preparing this account. Then where these capital receipts appear? In balance sheet under liability side. Similarly, credit. He has given payments now. Payments are of 2 types: capital payments, revenue payments. Capital payments means rare payments, non-recurring payments. Revenue payments means regular payments, recurring payments. So capital payments we should not show on debit side of this account. In balance sheet under asset side capital expenditure appears. Under revenue expenditure, revenue payments we have to show on debit side of this account. So we will start with receipt side, debit side. First one, to balance 4,550 rupees. So this is called opening cash balance. Opening cash balance means last year closing cash balance. So cash balance is an asset. We are not going to show assets here, therefore ignore. Next one, entrance fee 3,500 rupees. So in current year, we received entrance fee amount. Now we should observe whether this entrance fee is a capital receipt or revenue receipt. If it is capital receipt, we have to ignore while preparing income and expenditure account. If it is revenue receipt, then on credit side we have to show that amount. Entrance fees means what? When any new person is admitted as a member of our society, then he has to pay admission fees. It is known as entrance fees. So there is an argument regarding the accounting treatment of this income. Some accountants prefer to treat this income as capital income because one member is going to join only for one time. So this is one time income, rare income, therefore capital income. We should not ignore while preparing this account. But some other accountants, they prefer to treat it as revenue income because in case of not-for-profit organizations, this membership will be open throughout the year. So regularly some persons join into our organization as members. So regularly they pay entrance fee amount. As it is a regular income, repeated income, we should treat this income as revenue income and we have to show on credit side of this account. So as a student, which one you should follow? Whether to treat this income as capital income or revenue income? You can treat as anything. Only the point is, when you are treating it as a capital income or revenue income, below the table, you have to give one note. Entrance fees is treated as capital income. Otherwise, entrance fees is treated as revenue income. Like that, clearly you have to mention. If you treat it as capital income, you are not going to show on credit side of this account. You are going to ignore that point. If you treat it as revenue income, so credit side you are going to show that amount. But if he gives any instructions in additional information regarding the accounting treatment of entrance fees, then strictly we have to follow that. Here he is giving one instruction. Additional information, point number 3. Capitalize half of the entrance fees. Means 3,500 is entrance fees income. In this income, half amount we have to treat as capital receipt. So if a half amount is capital receipt, another half amount is revenue receipt. Capital receipt we have to ignore, but a revenue receipt we have to show here. So that a revenue receipt amount, another half amount we have to show on credit side. What to write in income column? By entrance fees. 3,500 into half, 1 by 2. 2 ones are 2, 1, 15. So 2 sevens are 14. 1 is there, 1 and here 0. 2 fives are 10. This 0 you have to put here. So 1750 into 1. Same value, 1750 rupees. Next, debit side, subscriptions 18,500 rupees. Subscription means when any member joins in our organization, to continue his membership regularly, he has to pay subscription income to the firm. So this is regular receipt to the firm, means revenue receipt. Therefore, on credit side of income and expenditure account, we have to show this amount. By subscriptions. I'm taking the amount in inner column because in additional information he has given 2 points related with this subscription amount. Point number 1. Subscriptions amount includes 500 for the previous year and outstanding subscription for the current year are 1500 rupees. So in first point he is giving 2 adjustments. One is subscription includes 500 for the previous year. We are preparing this income and expenditure account to know the current year surplus or deficit amount. So if you want to know current year surplus or deficit amounts, only current year incomes, current year expenses we should consider. But in this amount, last year amount is also included. So we should not consider that amount. Therefore, we have to subtract that amount. Minus previous year 500 rupees. I am writing the remaining amount 18,000 in inner column only because other adjustments are also there. First point continuation. Subscription amount includes 500 for the previous year and outstanding subscription for the current year are 1500 rupees. Outstanding subscription for current year. Here outstanding means don't think that we have to pay. Subscription is income, no? Therefore outstanding subscription means we have to receive. So income to be received. We prepare this income and expenditure account on accrual basis. So in accrual basis, we show received incomes, incomes to be received, both. Similarly, expenses paid and outstanding expenses, expenditure to be paid, both we have to show on debit side. Therefore, subscriptions to be received also we should consider. So this to be received amount is for current year, we should add it. Plus to be received 1500 rupees. Total in inner column only because one more adjustment is there. Come to second point. Subscriptions received in advance 500 rupees. Received in advance means what? Next year amount 500 rupees also be received in current year. And that 500 is included in this 18,500. So to know the current year surplus or deficit, only current year subscriptions we should consider. But next year amount is also included. So that next year amount we have to deduct now. Minus received in advance 500 rupees. Then the final amount 19,000 rupees in outer column. So the meaning is 19,000 rupees is the subscription income for current year. In this 19,000, some amount is received and 1500 is to be received amount. Next one, rent of lecture hall 2,500 rupees. This organization has one lecture hall. They lent this hall to somebody and they received rent. So this is a regular income. Means revenue receipt. Credit side you should write that. By rent of lecture hall 2,500. There is no adjustment for this. Therefore amount directly in outer column. Next one is interest on investments 950 rupees. This organization invested their amount in outside securities, maybe in public limited company debentures or in government bonds. So regularly they are receiving interest on that. This is regular income, means revenue income. We have to show on credit side. By interest on investments. There is no adjustment for this amount in outer column. With this, receipt side completed, debit side completed. Now come to payment side. Two types of payments will be there. Revenue payments, capital payments. Only revenue payments we should take on debit side of this account. First one, by salaries 6,800 rupees. So firm pays salaries to their employees every month. Means it is a regular payment, revenue payment. Revenue payments we have to show on debit side now. Therefore, write down to salaries. There is no adjustment. Therefore, amount directly in outer column. 6,800 rupees. Next one, By rent 5,250 rupees. So this organization has taken some premises on rental basis. So every month they have to pay rent. This is revenue payment. Revenue payments appear here only now. To rent. No adjustment. So amount directly in outer column. By investments 3,550. This organization invested their money in outside securities. So here security is one asset for us because this is capital payment. Regularly they are not going to invest like this. If it is revenue payment, it appears on debit side of this account. If it is capital payment, in balance sheet under asset side we have to show that. So investments in balance sheet as an asset we have to show that, not here. Next one, postage 1250 rupees. So this organization has to communicate with outside parties. Regularly they send letters. For that they need postal cards, envelopes or postal stamps. So they purchase them regularly from post office. This is one regular expenditure, means revenue payment, debit side. To postage, no adjustment, amount 1250 rupees. Next, electric charges 730 rupees, maybe electricity bill. So every month they pay. It is a revenue expenditure, debit side. To electric charges 730 rupees. Next, buy books 6,000 rupees. This library purchased books. Books are treated as fixed asset because if we purchase them for more than 1 year, for a long period, we are going to use them. So it is one capital expenditure. Under asset side of balance sheet, you have to show this amount. So not here. And in brackets, he is giving some date. 1st October 2019. This is known as purchasing date. We are closing the accounts on 31st March 2020. If this is the last date of current year, starting date of the year is 1st April 2009. And they purchased these books on 1st October 2009. This purchase date is falling between these two dates. So we purchase these books in current year. That is why in current year receipts and payments account under payment side is giving this. So let us see how many months they used. 1st October means October month they used. October, November, December 2019 is completed. Then 2020 starts. In 2020, January, February, March. So here 3 months, here 3 months. Total 6 months they used. Why we have to observe this used period? Because related with these books, there is one additional information. Point number 4. Books are to be depreciated at 5% per annum. So books are treated as fixed asset. On fixed assets, we have to provide depreciation now because as time passes, this asset value reduces. So depreciation on books is loss. Losses are to be debited to this account. To depreciation on books. You have to show the calculation here. Firm purchased these books for 6,000 rupees. Depreciation rate is 5%, 5 by 100, and we use these books for 6 months now. Only for 6 months we have to provide the depreciation. Therefore, 6 months divided by 12 months also we should write. Why 12 months I am taking in denominator? Because for 1 year 12 months will be there. So here how to cancel this? One numerator, one denominator we should cancel. So 6,000 is a numerator because divided by 1 will be there. Therefore 6,100 we can cancel or 6,012 we can cancel. Otherwise 5 and 100 we can cancel or 5 and 12. Similarly 6 and 100 we can cancel or 6 and 12 we can cancel. First common zeros we will remove. Numerator 2 zeros, denominator 2 zeros. Then 6 ones are 6 twos are. Now in denominator 2 is there. In numerator 5 and 60. So 60 and 2 we can divide now. 2 ones are 2 30s are. Now in denominator everything is completed. Come to numerator 30 and 5. These two numbers are there. We have to multiply both. 35s are 150 rupees. So depreciation on books is 150 rupees. Next, buy newspapers 3700. When firm purchases books, we have to treat this as capital payment. Balance sheet item this is. But purchase of newspapers, purchase of magazines, this payment is to be treated as revenue payment because regularly they buy. On expenditure side, we have to show that. 2 newspapers, 3700 rupees. Next, last one, buy balance carried down 2720 is given. So debit side, he started this account with 2 balance brought down. Credit side, he is closing this account with buy balance carried down. So debit side balance is known as opening cash balance and the credit side balance carried down is known as closing cash balance. So closing cash balance appears in current year balance sheet. Under asset side we have to show this amount, cash in hand, not here. Because cash in hand is an asset. Assets we should not show here, only incomes and expenses. So receipts and payments account, all amounts we have considered. Not only that, even adjustments also once we have to observe whether we have taken all the points here or not. So subscription related 2 points are completed. Entrance fees a half is to be capitalized, that point we have taken, and on books we have calculated depreciation. So additional information points also we have considered. So finally we have to calculate the surplus or deficit. Procedure is, in rough notes you have to find out the totals of two sides. Observe which side total is more, credit total is more. So in rough notes, credit total we have to find out first. 24,200 rupees minus debit total 17,880. Now difference is 6,320 rupees. This amount is surplus or deficit? Credit side we wrote incomes and gains. Debit side we wrote expenses and losses. Income is more than expenditure. Therefore difference is known as surplus. As this is not for profit organization, we should not use profit or loss words. Instead of that, surplus or deficit words we should use. Suppose expenditure is more than income. In that case, our answer is known as deficit. Now this answer we said we should write where the total is less. Debit side total is less. So debit side you have to write this amount 6,320 rupees. For our answer we should write 2 surplus. Next, put the totals on two sides. Credit side total is more. Therefore, two sides we have to write the credit total. As difference we wrote on debit side. Now all these amounts total will be 24,200 rupees. So this is all about fifth problem from accounting for not-for-profit organizations. Hope this video is helpful to you. Thank you.